Alright, welcome back to the African Crypto Warlord show. Hopefully I got you there with some of the clickbaity thumbnail. If I did, here you are. You will have 3-day bullish hopium, 3-hour bearish hopium, and then the 5-day is cooking. So I'll put the timestamps down there below for you, and then you can just fast forward. But anyway, long story short, I'm looking into trading stocks as I can meet the spread. So that is very interesting. Yeah, I go scalping for a couple cent moves here and there on Apple, 10 cents, hopefully 50 cents on whichever ones that I'm going to be doing the analysis is on. So those are the ones I'm going to be scalping. So today we're going to start off with the OG in the game. Apple, I'm going to be taking it from the 90-day all the way down to the 15-minute. Scalping, I will be using 1-minute Laplace distribution cones and all the other fancy stuff that Alpha Trading provides. You will see there. Link below if you like the pretty colors here. Volatility, entropy, probability, and statistics. So we're going to use Laplace distribution just for the... I'm going to break it down into sections. We're going to use Laplace distribution. We're going to get through all the cones. The cones that I've already stated. Those thumbnail ones, those excite me a lot. And then, yeah, we're just going to use the cones. Not all of them are going to be as helpful as the next, but that is where I distinguish, and I'm building this out as a case study and just as a reference, so I can come back to it in 3 months and be like, okay, now I can see how the 12-hour cone, 3-hour, and 6-hour all work together, those cones. Different assets. All right, so let's jump into it. I'm pretty much just gonna state this or that, and I'm gonna see if my observations are true when I come back. Let's just say next week. So we're going to just start on the 90-day. This will disappear after that. We will then use that to get direction for a full analysis. But I just want to plot out my Laplace distribution and have a record of it. Okay, so there's no zero volatility maxed out, which would allow me to put a cone on. Here we have the 45-day. Okay, cool. I'm going to keep this as fast and simple as possible. Let's start on the left. Okay, as Apple can hold above 100 and I see this is going to be, I have to be quite perfect here. As Apple can hold above $127.26, it's technically trying to push for 340. I'm going to treat all these things how I treat a shitcoin or a crypto. I really don't care. They move the same. Over time I've seen. And what can we see here? There's also quite high targets. But initially 291. If it holds above pretty much where it is here at this blue line, you'll be targeting 254. Hold 254. You're going to go for 290. Okay. So you'll see those targets come out. Anyway, you fail below there, you're more than likely going for 170 again, or even a little bit lower, 127. I don't care what your thoughts and opinions are on this, as that doesn't help. We just got to look mean reversion. Okay, so 21-day, pretty dope. It is actually matching the 5-day kind of distribution that you'll see here. So 21-day is at the mean. We can see that there's a little bit more upside that is possible for 250. Now that's only really viable, as you can see, if it gets above here, where it pretty much worked off of 234. Okay, so the range, quite hard to see, but you'll see here if it can hold 202, 195, it initially wants to push for 311, which starts to match up now with the higher 290s and the mean reversion play up here. In due time, though, that's more like beginning of December by the looks of things. Okay, so that's the 21-day. What can we see here? The 14-day is actually pretty bullish hopium, because I've seen MSCI do something similar, but we'll start on the left. 14-day, I think I wrote here, is pretty good. Okay, so I'm going to use this more as a trending cone for many years, because the last time it was all at zero volatility was ironically in 2007 of March, beginning of the month. Anyway, so that general idea is if it gets up there, fails through the pink, wants to bounce off the blues, go for the blues, fail off the blues, go for the blues. All right. That's just an easy probabilistic way to look at it. I'm not saying I'm doing pattern recognition, but these are those levels that do send it back to mean reversion or prevent it from going to mean reversion. So anyway, it holds above this blue line by the looks of the thing at $58. Meh. Carries on going up, but let's get a little bit more precise. As we on the 14-day here, 206. So you'll see 206 and 203 targets. A lot of liquidity might be sitting down here to capture it again. We will have a looky see. So I'm pretty pretty confident on 206. I mean, it is $30 away. We did have a thing. I don't want to get into momentum or direction of candlesticks right now because I use another tool first. So here's a general idea, and this is pretty crazy. But until the next 14-day cone prints from 2007 on March, what's the current price of Bitcoin? 120 grand? Well, Apple's pretty much signaling the same thing. If we don't get another 14-day flash in volatility, and those are just the numbers, I don't make the rules. Anyway, so that is a stupidly high number, I do understand. But yeah, there's not much contraction happening for contraction and volatility as of yet. So some might take like 3, 4, 5 at least candles to play out to even try signal for zero volatility. So we'll keep our eye on that. Yeah, because you need to get all 5 of them in the row. Black hole in the data set. Okay, 7-day. What do I have here? Probes. Yeah, see, 7-day. I would prefer the 14-day riding the blue line for me, but it's the same play as the 14-day here. It's just holding above that blue line instead of just at it. And for 7 days, sign in the land, line in the sand. 7-day line in the sand. I would just keep it as simple as possible, but we're gonna get more direct on the 5-day. Anyway, let's just say 193 for the next print. Anything above 193, bullish long term. Anything below 193, kind of bearish. And that sets us all the way down there to those earlier targets, so like 130. So it's quite a big range. Also, the upside here is again up in the 291s to 303. So it's quite a big range, but you'll see as we start to zoom down into the time frames, we'll tighten into like $10, $5, $1. So we can see it's quite a double up or half the price anyway. So this is what I'm more excited for, but more so the one on the left, which looks like the 21-day cone. But yeah, so the general idea is as long as there's no other flashes coming in on volatility, green doesn't mean buy, it just means zero in volatility. As long as there's no other green flashes in volatility, my natural tendency and probabilities play out blue to blue. Okay, so now that's only really going to happen if it's above this mean reversion here in the Laplace distribution cone at 230, just call it 230.19. So any price action I see above there, you see how we took it from like 19, whatever it was, just say like $200 now into 230. Anyway, so that's, as you can see, you start failing here, you're going to get into that target that we were looking for down here to try base the longer term trends on. So here's the line in the sand for that. Any closes below this, not bearish, 215, hold above 215. It's not bullish, nor is it bearish, it's just in a range. So the range is 215 to 250. So yeah, I don't really care about news or whatever happens because it means nothing. But yeah, that would be a range. I'd imagine if we don't see much resolution coming in 2 or 3 weeks from now, I imagine it gets stuck in here quite nicely, just bouncing around, seeing what happens with the tariffs. No, it's just bouncing around at the mean. It's going to have to put in work for the upside or the downside, be it good or bad news. Okay, here's something that is a little bit more justifiable for new highs. Well, it is justifiable for the new highs because if you watch my Bitcoin analysis, you've seen this play out when we were playing around at the bottom side of the cone at $76,000. Same thing applies here. So as it starts to reclaim the inside of this bottom side Laplace distribution cone, I'm not even kidding you. I look, because what happened on the one side happens on the other. That's currently triggering, let's be more realistic, for the first cutoff, 376. All right, it did escape the cone. So then I'm not saying because it escaped the cone, but if it's above this side of the cone, it's going to go push for 485. But let's be a little bit more specific here. Any holding above 220, just go 227.50. 227.50 cents. You're naturally looking at 254. Crazy, right? Okay, so that's again popping up into the middle side of, like, I think it was. Doesn't really matter. I'm not going to explain all that, but you'll see those targets. You can write them down 3 days. Just write the numbers down as I do these analysis, and you'll be like, oh shit, there's a lot more probabilities over here than there. Okay, so yeah, I would look for any place to the upside from here to 227 to pretty much push for 255. Any failures below here, we're going to look for the bottom side of the cone at 208, so it's a little bit above. You'll see some other numbers coming at 203. And yeah, there's a last little hopium bounce to keep it in the range. So you'll see, I don't really want to put the cones on together because it'll break your eyeballs. But the pink cone on the left, you can see will pretty much be in the data set over here in the middle on the right, edge of the cone. Last good little fight. Then after that, we just form mean reversion fail back into the downside 150s or something. But that's for later. Nice little line in the sand here, closer to price action. Means a lot. The 5 days, you can see it's very symmetrical and pretty gorgeous. So yeah, we'll see if we're going to push for the 250 target. If it holds 227. 3 day, I don't think I wrote anything here, so it's not really too helpful. The 5 day captured this a lot better. It's just giving you more so wider ranges. So 182 to 253. That's sort of why it's a cool. We got the 250 that side. This guy here 263, a little higher than the other side target. Sort of 3 day throwing in. I don't use the momentum yet. 3 day is throwing in a little bit of a probability, but you'll see. I think the 24-hour captures it. No, not so helpful. Better than the 3 day. I think it might be the 45-minute that captures this thing a lot better. Okay, but anyway, that's nice. That's cool to see. But I'm going to put more weighting on the 25 day. Anyway, if you do use the 3 day, there was some numbers for you. Here, similar effect, 24-hour and the 3 day playing around in the same place here. I'm not going to say a no man's land probability, but I want to make sure that there's maybe it's a mean reversion on another time frame or something. So yeah, there's a little bit of resistance in here. Any good news? 240s, 237s. If anything, I would have liked any kind of dumperoo to maybe have been a little bit closer to the probabilities. If they're not, this is where it gets a little bit thing. If they're not, and I can't see why they're shorting here, it's a problem. But anyway, now this is 3 hour. This is the bearish hopium thumbnail. 3 hour, 12 hour, 6 hour. Okay, so why do I choose to leave these on? First off, they broke out of the data set. Oh, I switched that one off. They broke out of the data set, which just means the limits of my model have been. Those are the limits of my model. The data set is outside the limits of my model. Obviously, I have other things. Don't worry. Cool shit. But I know that those are the limits of my model. So I can use other tools to go, okay, this is the limits of this current model. And once this event occurs here, then it technically signifies mean reversion back to its previous self. And that mean reversion is sitting here at 217. Now, why do I say this? The green applies for both sides, but I'll just make it big. Here you go. So this is a thin tail event. Thin tail event. This is a fat tail event at the bottom. So left shoulder, head and trough, right shoulder in the distribution. So we're getting a thin tail and a fat tail event on this current data set. Okay, that would signal for two things. Now this is going to apply for the 12-hour, 6-hour, and 3-hour because they're all up above the cone. It's going to signify two things. If I'm bearish, I don't want all these things to flash again. Because if they flash again and then it's above the cone, I know I'm not going to get the mean reversion. All right. If I want to make sure that I can hold the position for longer, I want to make sure all 5 of these don't flash. Because if it happened to the one side, it blew it out that much. It's going to blow it out this much. As you saw here, came out of the data set, blew it out, and pretty much blew it out that side. So huge, huge difference. It's going to do the same thing down here. We can have other cones to define at 45 day, 45 minute, 90 minute, 15 minute. But anyway, that is the general idea. So you're going to see this flash. I'll leave it on as I drop through the time frames. But yeah, so bears, zero volatility, trend may be coming to an end. Returns have just, percentages have hit 0, and they're going to pretty much decide if they're going to go positive or negative. And when that happens, when all 5 get together, you're going to have a very explosive move. The price section will increase faster or decrease faster over time. with the increase in volatility. It just moves the price faster, aka less time, more money, or less time to make money, depending on how you look at it. Okay, 12 hours, we're going to apply the same thing here. Dintail events to the downside, as we can see, 214, 208 are sitting here, it's bottom side. We did have those high term time frame targets, same thing here. This one I want to actually keep, because this is why I made it the 3 hour, because it's inside of the cone, so it's a little bit more actionable. So we're going to use the one on the right here. So now we're going to get into more intraday time frame shit, but pretty simple, right? It's pretty much all up to the 5-day mean, the one on the left, if you go back to it. But anyway, here, any failures below 232, just go 232.50. We do pretty much look for 213. To remain bullish, doesn't really matter what happens here, but if price action does go down, the bullish touch I am looking for is sitting at about $225. Holds above this pink range, you can carry on up. Fail this pink range, you come into mean reversion, try just maintain a range, not bullish nor bearish, because you're around the mean. Technically it's a bullish skew, but it doesn't really matter. As it comes in, because of the bullish skew, it should want to stick over here around about 220. If it fails, the normal probabilities are going to go through 213, 210. Okay, so this is getting a little bit more actionable. So this is why we start to zoom in, so we can start to capture. Alright, this is getting long in the tooth, but I'm put more hours into setting these charts up than I'm speaking for. And I'm liking the 90-day. The 90-day, I think I wrote down here as a pretty good example, but I think the 45-day is a better one. Anyway, hook the blues, go to the blues, re-enter this cone, back to the mean, 210. Same like the other cone. Bring this one back. This one is outside of it. That's why I didn't like it as much as the 45. Same effect here. Any kind of bounces that may be helping up here is, again, we had a 227 target, so this one's signaling 228.50. This one's signaling 226. And 45 minutes. Captured. You can't run. You are not getting your money back. Okay. Actionable. This is what I'm going to be trading for intraday. So I'm going to be like, oh, it's at the blue line, and want to go into that blue line over the next couple of days as it prints out. So this is going to be very actionable for me. I'm going to apply 45 minute, 15 minute, 1 minute. Cracking. Yeah. Okay, so bounce off blues, go for blues. Fail blues, go for orange. 213. 229. So that's above those other cones that we've just come in from. The 12 hour, 6 hour, 3 hour, 90 minute. It's above the probabilities on the 90 minute. Anyway, here $229.5. Hold above there, push 237. Fail below there, still even bearish. It's going to lose like $15 or something. But it looks for a bounce at 218. I suppose, yeah, 218. Just say 219. 219 bounce, 219, remain bullish. No bounce, 219. How much do options cost at $191? Okay. Here, same effect applies, nothing too different. Nice skew, everyone's there. Hidden bull div with the bullish skew in the data set. Is where I'd expect this bounce. I would like a bounce here more so for a longer term, but anyway, hold bullish 222.22. Pretty good. Any bearish action, hidden bear divs 232.77 for intraday, because we're getting quite close into it. So maybe Wednesday. Let's see, this might play Tuesday. I think this will be more like smoked on Monday, but we'll see what that does for Tuesday. I don't know. I don't know how fast these fucking things move. They don't move fast, so I have to trade it on the 32nd, I think. But it doesn't really matter. Okay, and then we're gonna end off with a 15 minute. I will do a. Doesn't really matter. If you watch other ones, I will leave a surprise in there. Anyway, so Laplace distribution cone, similar effect. Hit the blues. Try not to reclaim the blues. Failed the mean, as you can see here. Volatility has printed a new cone, and that is over here. Do I want to show? There. We'll go. Oh, this might. I will never find this. I actually didn't think of that. I switched it off. I'm a dumbass. Anyway, because the market closed on Saturday. But the new little cone will be in here. It would more than likely be at about this is at about the -1 blue. So if you look at my cone lines, orange one in the middle, then it's usually a -1 blue, then a pink. So sort of trying to ride the blue, and then more than likely pink is somewhere in here. 50 cents lower, craziest maybe 50 cents lower. But yeah, we'll do that for later. So if you found this information helpful, please do like and subscribe. I'm going to be doing another, 10 more, I think. I don't know. It's going to be tough, but it's going to be a good day. And I'm going to log on my data set. I hope you enjoyed the case study. If you found some information helpful, let me know. If you want me to review other stocks, I'm going to get through all these 10, hopefully by today. And I'll just read your comments, and then sure, I'll do an analysis on those stocks. Let's just try to keep them on NASDAQ or NYSE. He knows the fucking lingo. Have a good day. Much power. Stay freaking wow. African Crypto Warlord out.